Good morning. It's Harvey Jackson from Producer Profit. I'm just going to go through some of the news items here. Some of the main ones I'm touching on is cold temperatures in the winter crop areas and corn ratios. First story that I'll just touch on is the Russia-Ukraine war. Trump has talked to both parties, and it sounds like he is leaning to give up some of that land that Russia has occupied since the annexation of Crimea, and in exchange, he will provide some securities with some minerals, rare earth minerals in Ukraine. So it might sound like he's friendly with Russia, but at the same time, Russia basically had control of that land since the annexation. So let's get into the temperatures. You can see that there's some cold temperatures in the middle there, but of course colder up here, and it looks like it's going to continue for a few more days. So here you got a 5-day temperature anomaly. It's still the coldest in the prairies in the northern plains U.S., but Kansas is getting cold now. Are we breaking dormancy? I talked to a colleague of mine there, and it doesn't seem like there's any dormancy getting broke there as of yet, and it's not normal that it breaks dormancy just yet. So if we look at moisture, kind of 10-day kind of forecast, looks like Argentina is going to continue to get rain. And the other thing you want to maybe note is the dryness in Brazil, where there's harvest going on. So that's going to progress pretty quick, and really nothing to note significant anywhere else on the moisture side. But the cold here is hitting Canada, North America pretty hard, and there is some cold over in this Russia Black Sea region, but it's not as cold as over here. But if we look at weather models, they usually do in waves like this. So if this pops over and drops in over there, the high and low kind of wave analysis that kind of happens. So another one that I always find interesting is the Great Lakes as they freeze, and this just kind of gives you an elevation. And this is why Lake Superior usually has no frost. Huron and Michigan don't have hardly any frost, and Lake Ontario has some, but not that much. But Lake Erie is the one that kind of locks up that the movement going through the Great Lakes, and of course as you get closer to the shorelines. So here's just a median level, and we're approaching that with a little bit below the trend, but with some added cold temperatures that we're seeing in the next couple of weeks, it might kind of emphasize it a little bit more. So if you just look at where the frost is, and it's the gray and black, so here you get Lake Erie, and you got some of these areas that are a little shallow, and over here is where a lot of our shipping ends up coming from in that Thunder Bay region. But you still have to get through some of these locks and be able to get into the Great St. Lawrence, and there's no operation probably until the end of March or greater. And if there's more frost, it takes more time, of course. Just another offside information. I pulled this from the internet, and it's just, and I don't want to be conspiracy theorist that this is going to track exactly the same, but just have a look at this. Inflation data today versus in the 70s, we're almost tracking identical. So if we're thinking that we're beyond it, just maybe look at history. History tells us that we've got the possibility of actually following through here. So to the same extent. Soybean corn ratio. So here from Susan Noble on Susan Shroud, actually, this is where we're tracking right now. So you can see where we are as far as the corn soybean ratio, and 2.4 is kind of like favors corn, favors soybeans, and as corn kind of holds up and soybeans kind of falter a little bit, we're definitely favoring more corn. And just in what ratio, how much are we going to favor, how many acres are going to go in, and this kind of drives maybe even the South America potential that there's going to be more corn down there as well. So here's your China versus the Chicago, and you can see that we've narrowed. And I've mentioned this to a few clients, like the China price is a lot higher than our price. So you got the dollars per bushel of China versus the dollars per bushel of the CBOT there, and this is where we are on dollars per bushel, and then you got your premium differential as well. So we're looking at a 275 spread right now. December corn futures seasonal settles by crop year. So this is the 2024 February insurance average, and this is where we're currently trading right now. So we're just trading just below it. And this is the trend of what the December futures is doing right now. So, but you can see seasonally it kind of holds out a little bit and then tracks down as we get into more certain of what size of crop that is growing, of course. So let's just have a look at the markets. Canola is slightly up, and same with rapeseed. Soy oil is just down 0.4 of a penny, and European palm oil is down. Crude oil is down a little bit as well, and we're trading down at 70 70 and a half. Soybeans just up 1.125 cents, and the wheats are 3 to 4 cents up, and even higher on the red winter. So if we look at canola right now, we kind of got, I just drew in this channel, and it's probably not perfect by any means, but we're trading inside of a channel up and down so far. So right now we're currently at the top end of this channel. So if you're looking at making some sales, and I'm now tracking May, even though there's still a March contract that needs to come off in the next few weeks, but a lot of contracts need to be rolled here pretty quick. So just keep that in mind as well. Where we are, slow stochastics is starting to come off of the top here as well. And that's why we're just playing the range with a short scenario there. So November canola is actually still well supported on a very tight channel. If you were to draw a channel in there, it looks supported right now, and still just hovering above the support line there. So if we look at November canola, and zooming out in previous highs, we're just getting very close to trying to break out, and that's the difference between November and the front month May, March. We just touched the breakout and retracting, so we could have a little bit of a stall here. Here's your rapeseed, trading sideways to uptrend. And if we look at it, and I moved everything from March to May here, so there's a skew of maybe slightly different numbers here, but still below where we were, a month ago. But we're trading below that trend line, trading right at $106 differential right now. Here's your soybean oil is basically trading sideways without taking note that tariff was on Canada and then it was off. But if you remove that, you would just say we're trading sideways. Palm oil down a little bit, but it's got a pretty good recovery. Probably needs to get above the 4,800 ringgit before you can say it's a full recovery. Soybeans broke the trend, of course, and it's got a little bit of red on the screen. We are playing that one to probably get into this lower tens to even lower than that. Looks like we could probably retrace all the way down to below 10 for sure. Here's a map of the moisture, and it's you can see the moisture is accumulating in there. Really nothing else to kind of play out there at all, but you can see that it's actually happening there. Here's your corn. There's probably a little bit of a downtrend here. You can see that it's slow stochastics is probably a sell. Your wheat, it's got this uptrend channel as well, but it's at the bottom end of the channel, not at the top. So just keep that in mind. We're looking for a bounce to try to maintain this upward channel movement. Your December, same idea, but still looking for that kind of a range before we get too excited about pricing. There is some pricing that's happening for the delivery that needs to happen and required by clients for the off the combine. We should look at some sort of replacement strategy on that grain. Hard red winter, same thing, bottom end of the channel. It's a pretty steep channel, so if it breaks through, we may have to widen it, but right now we are in an upward trend, and a little bit of a cup and saucer kind of a look there. Oats, really just, it looks like it's chopping sideways to lower. So if we make a lower low, definitely it's just a downward trend on oats. On corn, I'm showing maybe another indicator that I haven't used very often. It's like a momentum indicator, and you can see that it does kind of line up with some of these other slow stochastics. So I might look at using this one as well. So just a FYI. So corn is breaking down a little bit as we speak. Live cattle, we broke apart there, still going down. We've still got a downward trend, and yet we look at lean hogs, and we're making higher highs. So this is a little bit weird, but at the same time, I'm going to say when we're talking the animal livestock industry, we've got all kinds of chicken issues in the U.S. We've got hog issues with PRRS as well, and that's why the market's rallying there. We've got egg prices record high, cattle prices quite high. Because of smaller numbers, you got stock or herd numbers going down, and that could actually start to impact corn. Just a FYI, that's what I'm looking at.